What's up, y'all? Welcome back to the Mining Pod. For today's show, we've got Michael Rhoden, Director of Business Development at TicTacc, which you might not know is one of the largest ASIC distributors in the world. So we are going to be talking about all things ASICs on this podcast. We're giving you an update on the ASIC market in the second half of 2025. We touch on Proto's new ASIC miner rig. We talk about how tariffs are impacting the ASIC market landscape and whether or not the manufacturers are shifting their strategies to other countries in order to move inventory. We also talk about what thinning margins mean for secondary sellers and brokers in the ASIC market. I also asked Michael to give me his read on other new Bitcoin mining manufacturers like Auradine and Bitdeer with its CO miner. So I hope y'all enjoy this one. Fabulous conversation with Michael. Really enjoyed talking to him about this stuff. You ever get into your buddy's car and think, dude, how do you live like this? There's half-eaten Taco Bell on the console, a pile of garbage and fast food cups and bags, rumbling in the trunk. You look behind you under your seat and you're pretty sure you saw something move, but you don't know what. Well, how do you think your Bitcoin miner feels if you're not keeping on top of your filtration game? Y'all need to get on Colorado Air Filters. Colorado Air Filters is a major supplier of air filtration systems for Bitcoin mining sites. And they're currently running a summer sale on their inventory, so now is the time to act. Whether you need HEPA filters, new shipments or installations for your containers or your large-scale mining facilities, retrofitted buildings, Colorado Air Filters has it all. And units are ready to sell now. Contact sales at coloradoairfilter.com and use the code MININGPOD to claim 15% off today. Again, that is sales at coloradoairfilter.com with code MININGPOD.
Hey, Will here with Blockspace Media. Did you know that we have individual feeds for all our shows? If you're watching the Mining Pod, Bitcoin Season 2, or the Court Show, be sure to check out the individual feeds. You can find them on your podcast player of choice, whether that be Spotify, Apple, YouTube, etc. Just type in Blockspace Media and you'll find all our shows pop up, or just type in the individual show name like the Mining Pod or Bitcoin Season 2. Be sure to hit that subscribe and give us a 5-star rating so we can continue to bring you the best content in Bitcoin.
Michael Rhoden, welcome to the Mining Pod, sir. How you doing?
Great. Thank you for having me on, Colin. I really appreciate it.
Yeah, man. Glad that we could touch base. We met in person at Bitcoin is for Everyone in Portland. It was a perfect timing. We've been wanting to do an ASIC market update. We haven't done one in a while. You know, dynamics are kind of shifting. We've got new entrants to the market as well, which we'll open the show with. And maybe that's a good place to start. You just got back from the Proto event in Dalton, Georgia, held at Core Scientific's facility down there. Just out the gate, what are your impressions of Proto's rig miner and what takeaways or insights did you glean from that event?
Yeah, I just got back from the event. It was quite incredible to see what the team has put together. They've got a lot of members of their team coming from Apple, and you can really tell that based on the design of rig. It's very aesthetically pleasing. You're able to, take off a fan and pull out a hash board with one hand. And yeah, I think this would be a game changer. It's coming in hot at 120 pounds. So it's a pretty heavy machine. And I think it's said to last even for upwards of like 10 years or so. Only time will tell, obviously. There's definitely some big interest within some of the larger miners in the industry to see whether or not they'll be able to pump this out at the capacities of which they have a demand for. So I'll be really interested to see, what that supply-demand relationship looks like, and also at what pricing they're going to come out at. They didn't come in hot, under sub 10 joules per terahash, which we've entered that era now within the Bitcoin mining space. But I think they've got some other unique USPs, and I'm looking forward to hearing more as well.
Did you get any direction on pricing for this thing? Do y'all have any best guesses of where you think it might fall on the dollars per terahash scale, or is that still a little too opaque?
Yeah, I think it's still a little bit too early for it. I'm waiting to also see that this pricing and what it's going to look like. A few people have made their over-under bets on it, and we were doing the same thing at the event. But
what are some of those bets? What were some numbers thrown around?
20 was a good basis point. Some were saying it'll be lower, and that's how they're going to take on the market, trying to have a really competitively priced product. Whereas knowing that you don't actually have to replace this whole miner if something goes wrong with it, that, anytime you're going to upgrade this, you're basically going to be buying new hash boards of which you can just slide in and slide out. Maybe it can be much more competitively priced, and it's hard to really say what this entire price entails because it's not going to function like other miners where you have to replace the whole thing if you want to upgrade. You're just going to be upgrading those hash boards. So I think they claimed that you'll save 20% of your overall cost this way. But, it's really hard to say what that's going to look like in the long run.
Yeah, for sure. I wondered how they're going to approach that. I mean, I would assume that you would have to buy hash boards from Proto. Sure, someone could go out there and tinker and make it mix and match with using other hash boards from Bitmain or MicroBT, but be interested to see how they scale that and tier that, right, between like the fully equipped models versus just the hash boards to upgrade. Last question on this. Since the launch, has there been any increased interest from TicTacc's clients who are trying to source these machines? Are people starting to get in the queue for wanting to buy these?
We've gotten some bites. People have definitely asked for more information, with regards to what the pricing is going to look like and what their capacity is going to be. I think that we still just need to wait for Proto to launch this info and to talk about it. They did update their website during that event, so you can go there and find all of the information that's public. And I think that this will definitely hit the market hard and be a game changer once they're ready to offer it to others.
Going back to a lot of the Proto team or some of the Proto design team coming from Apple, you really had that feel during the launch event. Like it looked like I was looking at the release for a new iPhone or a new iPad or something, like all of the branding was meticulous, this kind of beautiful monochromatic, white, silver for the Proto branding. Seemed like a really cool event. Hopefully they'll have more in the future. I'd love to attend something like that. It seemed like a really well done thing. And the machine itself is just absolutely gorgeous. All right, moving on from Proto and just looking kind of holistically at the rest of the ASIC market. Biggest theme this year, no surprise, for Bitcoin miners in terms of CapEx have been the tariffs, right? I haven't looked at the specific numbers for some of the main hubs for ASIC manufacturing recently, talking about like Malaysia, Indonesia, and Thailand. But for a while there, it was about 10%. And the Trump administration is now solidifying some of those so-called reciprocal rates. And most countries are ending up in a 10 to 20% range in terms of their overall duties for imported goods to the U.S. So we're about 4 months removed from Liberation Day, right, when Trump announced all these reciprocal tariffs. And we saw kind of an immediate shock to the Bitcoin mining market with some of these miners and some of these brokers expediting their imports to make sure they could beat those cutoff dates so they wouldn't get slapped with a duty. What are we seeing now that we're 4 months removed from that action in terms of how this is impacting pricing and demand for models in the U.S.?
Yeah, I would say it's definitely the hottest topic right now in the ASIC market space. And there's just a lot of uncertainty in the markets right now. Policies have been unstable and dynamic, and this has really influenced a lot of the strategies, especially of these larger companies. I can say that they're hesitant to put in futures orders because, which in the past would be a very strategic move, but they don't know if these tariffs are going to increase. And this is definitely slowing down their procurement and increasing their strategic diversification models, like going into AI, HPC, or becoming a treasury and beyond. I know you're well aware of these trends. And many miners, especially the ones that are based in the U.S., are constantly asking about what is your U.S. stock, or even asking about when these miners are going to be produced or assembled within the U.S. And I think that'll be a growing trend because of the tariffs, to see more assembly here in the U.S. And whenever you look at the markups because of tariffs, it's obvious for people to go the route of starting to assemble here because it will cost less to ship the parts here and put it together rather than face these tariffs that come from shipping a readily made product. And nobody knows whenever they're going to decrease these. So, I think that uncertainty remains. There's been less of a demand this year within the U.S. in comparison to last year, and I think that also is something visible for the rest of the world and the entire industry.
So I want to put a pin on the U.S. manufacturing thing for a minute and come back to that, because that's the obvious answer to a lot of these things. Before this next question, though, just a quick fact check. So Indonesia, Malaysia, and Thailand all have 19% duties on the goods that they ship to the U.S., and that's where the majority of the U.S. gets. That's where the majority of hash rate for these U.S. miners, they come from those countries, specifically Malaysia for Bitmain. They have a lot of facilities there. But with regards to, you said the U.S. market hasn't been as hot as it was last year. Oh, is some of that buying appetite shifting to other jurisdictions? Or another way to put this, have you noticed anything from Bitmain or MicroBT specifically in shifting their business strategy to try to pump more supply into some of these other hot markets because the US isn't biting as much? Have they kind of shifted their marketing strategy or their sales pipelines?
Yeah, to some extent, I think most definitely. And they've even been more transparent, at the last World Digital Mining Summit about where they are mining, in places like Paraguay, Oman, Ethiopia. That's also been a hot topic, especially in the past couple of weeks. And they're most definitely seeing a large interest in those places and acting accordingly. Whereas I do believe that they still are rather bullish on the U.S. and also announced, assembling here, and that they've also got a factory set up even in Mexico. And I do believe that there will be an increased focus on strategically aiming to continue to build out hash rate in the U.S. But to answer your question, there are a few others of which they're paying attention to a bit more too.
What would you say are the hottest markets for mining right now outside of the U.S.? One of the things we've been tracking recently is there's been a lot of increased activity in Russia over the last few years. According to Hash Rate Index's global hash rate heat map, they placed Russia like second behind the U.S. with about, I think it's roughly about half of the hash rate that the U.S. has, and then China behind that. Are you seeing a lot of interest in the Russian market and even in China right now? I mean, what are some of the hottest markets outside the U.S. for y'all's business?
Sure. Yeah, I can say, we sell to large entities as well as other distributors, and often these other distributors will tell us their feedback and where they're selling and what's hot. And Russia's definitely still hot. There's a growing demand and increased interest of expansion of miners that are based there. And obviously, it's not as big as the U.S., but it has been one of the most resilient and large-scale countries of which are mining Bitcoin around the world. I think that because of fluctuation of their native currency, the Russian ruble, that in relation to the dollar, that the cost of mining has been shown to be more expensive. So I think that has added to the slowdown. You don't see so many foreign entities trying to go there, but it's definitely still a hot market. They're definitely still ordering miners, and I would say that it should be expected to grow. Maybe not as much as its previous growth due to geopolitical reasons, but we still see that as a hot market. Ethiopia was another one. This has been one of the fastest, predominantly because there's been a lot of Chinese miners who've been mining there. They own data centers there. The S19K Pros, some S21 Pluses have been very popular there. I believe there's around 1.5 gigawatts of miners there. We even know of one entity of which has around 600 megawatt. They've got extremely low power costs. You're looking at around 5 cents. There was even an entity of which sponsored Mining Disrupt in Fort Lauderdale earlier this year that was boasting 4.5 cent all in hosting. And I was just shocked to not see a line around the building waiting for people to send their miners there. But I think many of them, at least US based, because that was here, have been hesitant to do so because they're not sure about the stability of these foreign markets and the uncertainty of what's to come there. And, rightfully so over the past couple of weeks. Hindsight's always 2020. We've seen that they are putting a halt to expansion of miners there. To my knowledge, the current amount of mining going on there and the people who are well established there are okay. But there might be challenges, I think, to even produce new, power plants and everything else needed for them to be able to grow there. I think that they will halt that. So that was a really hot market, within most recent times. And
zooming, sorry to cut you off. Zooming in on that though, just so what are you hearing from the miners who are active there? You said that they don't seem to be very, very worried about getting kicked out. They'll be grandfathered in. But I mean, has interest kind of just died out for that? Are any of the miners who are operating there that you know of looking for an exit strategy? What's kind of the vibe for people who are operating in Ethiopia right now?
Yeah, this is all really fresh news. It's only happened over, I think, like the past week and a half or so. And, we have contacted the people that we know mining there. And I can say that they feel comfortable enough, especially these larger entities, to stay there. Not so bullish on being able to expand their operations if they are already at full capacity at the sites of which they own and operate in. And others seem to say, I told you so, and they're not going to be looking there for expansion. Yes, I do think that the entities of which had expanded there and still want to continue to build out will, at least for the foreseeable future, look in other places, maybe like the Middle East, like Oman, for example, or they can go down to Paraguay. These places of which I think don't have very strong national currencies, of which really fluctuate a lot. I think it's very beneficial for them to find a way to accumulate Bitcoin, as much as possible. And those seem to be the regions of which people are aiming for in terms of being outside of the U.S.
That makes sense. Going back to China here for a second, we've been hearing rumblings of activity picking up over there, formerly where some of the ASIC brokerage desks in our orbit, they would talk about how there was no interest. Now they're starting to pick up calls again from miners in China trying to buy equipment and expand. What's your finger on the pulse? What's your take for what's going on in China right now? Is this an easing of some of those mining restrictions, or is it kind of the usual suspects who had the blessing of the government kind of getting a little more comfortable deploying more hash? What's going on in China right now? Because it seems kind of like mining is quietly waking back up.
I think the point that you made in the latter is key here, that some of the people who have those blessings maybe perhaps are ramping up. That there was yet another fake China mining ban, I think around a month or so ago. I believe you covered that as well. It is not legitimate. I think that there was only one true ban ever in 2021, or at least the main one that really changed the game for the entire industry and the world associated with Bitcoin mining. And I heard on some of your previous podcasts that this topic had come up, and I've mentioned it to some of my colleagues and partners who are working there and mining there. And it can be confirmed that there's absolutely mining activity there. Perhaps one of the trends that has increased is immersion, plain and simply because it can hide a lot of the noise there. Harder to find people who are mining if they're doing it in a manner of which they don't want to be seen. That's at least rumor has it, and I can't point my finger at any particular entities or individuals doing so. But that is something that's being said to be happening there.
We are CleanSpark, America's Bitcoin miner, a publicly traded company with the largest operating hash rate, powered entirely by self-operated infrastructure across 4 states. This is our proof of work, and we are setting the standard for what's next. Learn more about the intersection of energy and Bitcoin at cleanspark.com.
The immersion versus hydro versus air-cooled debate is one that we're always tracking. Curious your thoughts on what you're seeing from some of your customers, specifically on the hydro versus immersion front, if either of those more advanced cooling systems are starting to gain more market traction. Know that, Bitmain is very big on their hydro models. They did the direct to chip liquid cooling model, the U3 S21 EXPH. And also they've been, the S23, the kind of, I think, the primary marketing point for that entire series was the S23 Hydro. That's the one they opened up with at the World Digital Mining Summit. Are you seeing increased appetite for these models? Are miners leaning towards one or the other?
Yeah, most definitely. Hydro is the biggest trend right now. And you also mentioned the container factor, which I think plays a huge role in that. These older generation of containers used to be water guzzlers, just burning through, tons of water per hour, even for one container in there. Latest is a completely different story, of which, uses almost zero water. They're much more stable, and it helps create better, uptime and longer lifespan for these ASICs. The S21 Plus has been selling very well. I think that's been our best seller even for this past year. And Bitmain produced a lot of them, which you're aware of, and the prices have been very competitive and dynamic rather too. So that's played a huge role in that as well. Hydro facilities are expanding. I'm literally going to visit a Bitmain site in Amarillo, Texas tomorrow. That they coordinated such a tour. And I think want to showcase what a top tier facility can look like with a hydro setup. So immersion is also growing too, but it's growing less fast as hydro, and that's definitely the biggest trend right now.
Why do you think that is? Is the hydro, or the hydro units just easier to get off the ground? There are fewer moving parts. I mean, you obviously have the liquids for either to account for, but maybe it's a little less messy. Why do you think hydro is winning this race?
Yeah, I'd say less messy is one factor, and then another one is perhaps Bitmain's all-inclusive package here of having the containers with the miners that are made particularly for these, and the deals that they've made accordingly, and then just a lot sells based upon rumors, and who people have said that they've needed fewer repairs done to the hydro units, that they seem to just be built better, working, and people are rather bullish on them. So, once one large scale entity says such a thing, then another one catches wind of it, and this snowballs into this being the best selling type of miner within the industry rather quickly. I would say this grew way faster than I thought it would, because it is more costly, in terms of your capex than your air cooled miners, but it is the direction in which the industry is going for sure.
You mentioned in your one of your previous responses that Bitmain produced a lot of S21 pluses. We ran a story last year, I believe in like Q4, that there was kind of a glut of supply with ASICs, and at a time when albeit margins were very thin, hash price was pretty low. I believe it was in like the $40 per petahash range. But there was this dynamic where Bitmain was having to issue a lot of coupons or upgrade or orders from some of their biggest clients, like public miners, because they were coming out with these, the S21 Plus, S21 XP, these exponentially better, at least, on the margins than what miners were getting with the S21. And they were kind of ticked about it. They're like, well, we need to have the best machines possible. We don't want your S21s. We want some of the new ones. Do you think that Bitmain over allocated for its chips in this last batch of the S21s? And if so, how did that impact the kind of supply and demand dynamic that was driving ASIC prices over the last year?
Yeah, good question. I wouldn't necessarily say that they over allocated this, but the chip production cycle is normally longer than like 6 months. So these manufacturers are not able to avoid risk and exposures to Bitcoin price changes or increased tariffs or anything of that nature. And I think there was a lot of this that happened predominantly due to the tariffs that might have slowed down the demand for this generation, but they've tried to remain as strategic as possible. And they've done things like having better sales for these miners and whatever they can do to get them off the shelves, or even putting them, to work themselves and having them mining. Today's price of Bitcoin is very high. We're constantly hitting new all-time highs, and so the payback days are short, and the ROI is high for this series. And we see an increased, demand for it, and an extended demand. I think it's the case that these all didn't sell out immediately, but people are still buying in large batches, batch after batch, and they continue to be profitable, and there's an interest. So you can look at it on one hand and say it looks maybe like an over allocation. I think it's really hard to come up with an accurate depiction of which can portray how many miners are going to be sold, and then if not a lot, then you have to act accordingly. And I think that they've just been acting accordingly.
Yeah, I heard a kind of speculation, a little tinfoil speculation, that some people were thinking that maybe Bitmain had increased production to kind of glut the market with supply to drive down prices as all of these new entrants were coming out. But it could just simply be because every year they kind of have to bid for a little more space from TSMC to remain competitive, and they just had way too many chips this year for what the market demanded, especially with all the AI and HPC pivots. So on that note of, if I try to keep track of ASIC prices, I used to do analysis at Luxor for our quarterly reports, and I would always be looking at ASIC prices, hash price economics, and kind of looking at the correlations between them. Obviously, we're not ripping like we were last bull run because we had the China mining ban, which took difficulty down by about 50%. And so you had this kind of gold rush of mining in the US, and mining profitability was super high. We haven't seen hash price react as favorably in the current bull run. And so margins are still relatively thin. But if we look at the correlations between ASIC prices and hash price over the last year, we start to see the ASIC prices are not as sensitive to movements upwards in hash price. We've seen them stay relatively stable and tame. We have not gotten the crazy run up that we got in S19J Pros, for instance, the latest generation during 2021. So I'm curious to hear from your side, how do some of those, maybe the weaker demand in the ASIC market and the thinning margins accordingly, how does that impact how the secondary ASIC market approaches its strategy? Because y'all are often allocating, you'll buy a bunch of machines from one of the major manufacturers, sell them to another distributor, or sell them to miners directly. Has this changed how y'all have to approach allocation, and specifically how you trade these ASICs?
Yeah, most definitely. And there's some great points. I'm always impressed by your insights into the market here, and I hope that I can share some accordingly. In the past, the price of ASICs have almost directly have been correlated to the price of Bitcoin, but we've seen that gap spreading, whereas we've seen Bitcoin price all-time highs, but the price for Tariffs for a lot of these miners not growing to all-time highs. And it is now a buyer's market, and they have been able to negotiate for lower prices, very often so. The secondary market of ASIC sales is still very hot in the U.S. As well as other countries. The margins are thinner right now. They're becoming increasingly narrow. And that's what's showcasing that this is a buyer's market. Some of these buyers, especially the well-positioned ones, are able to negotiate pricing with sellers like us at this moment. And, we're trying our best to sell out a profit. Whereas there are some players in this market, which hold their own inventory and are not simply brokering, that are selling at a loss even, just to pump out some of this stock that they've got and keep their clients happy so they don't go to some others, because it is becoming increasingly competitive. And we see that being the case, of which shows for this year to be quite a bit slower than last year accordingly.
So just zooming in on the slowdown a little bit more, with all of these AI and HPC pivots, you've had a massive contingent of the ASIC miner market, a massive buyer collectively with the public miners, really shrink its allocation to hash rate. Just a few off the top of my head, I know Bitfarms committed to not buying any new machines, I think through 2026. Iron was hitting pause on its own hash rate expansion as it looks at AI and HPC. And obviously you have Core Scientific. They've got that 15 exahash allocation from Proto, but they haven't announced any new orders recently. really the biggest buyers right now seem to be like your Mara, your Clean Sparks of the world. And if they continue to expand, maybe Kango, because they're pure play. But a lot of these miners are looking at AI and HPC. What does that do in terms of taking pressure off of the ASIC market from the demand side? And is there anything that, brokers, manufacturers, et cetera, are doing to try to shore up some of that revenue?
Yeah, most definitely. It's been a huge trend. If we look back, the Core Scientific was the first major pubco to announce such a partnership with CoreWeave, which we have seen lead out to even like a $9 billion buyout, which is the largest buyout we've seen in this industry. And many other entities have followed suit, where now, if you're not diversifying into HPC AI, you're one of the few. And no doubt, I think that this will continue. And part of it is due to there being some type of a strategic diversification and having different flows of income, as well as strategically diverting from the tariffs, of which have made it more difficult to grow out their Bitcoin mining fleets. And then also, I think, especially whenever we talk about these pubcos, after Core did this, companies were just mentioning AI and HPC, and their stock prices were shooting up. And we saw it flow from, just those quick mentions to even fully redoing their identity and branding of their companies, and changing their website, everything you can imagine accordingly. And that would make their stock price shoot up. So they were very incentivized to do this. But a lot of them have stuck to their guns and actually shown some expansion in those routes. So yeah, this has made things slower in terms of ASIC procurement, but there still is an ASIC arms race among some of these larger players. You mentioned Mara. They cited a 75 exahash target, which is just massive. CleanSpark reached their 50 exahash target. So just looking at those larger entities alone, you can see that there is still a race. Whereas, of course, many of them are diverting, and I think Mara just even invested into an AI HPC company too. So maybe they will go that route as well after being very vocal about being a pure play Bitcoin miner. There are also a lot of high net worth individuals too who are mining Bitcoin as well. So it's not only these pubcos there, who are doing this, but we see a lot of growth there too. And I think even alongside of this, one of the bigger trends now is becoming a treasury, or at least establishing some form of Bitcoin treasury. And even Mara also jumped the gun and did this. They already held way more Bitcoin than numerous other entities within the space. They were one of the top holders, and then they bought more, and I think that we're going to continue to see, I think, having an industrialization of the space and entities of which are doing things at a scale of which we definitely had never imagined, 5 years or so ago, especially like a decade ago. And that'll definitely have an impact on the ASIC market dynamic. I think you and Will both stated some time ago that you had believed that the U.S. market had peaked predominantly because of this diversification into AI HPC. And I think that there will be a faster growth of that diversification into AI HPC than there will be a growth. We're seeing that now, but I do think that we will continue to see growth in the U.S. It definitely hasn't completely halted just yet.
Yeah, Will and I did call for that. I wrote a column for our In Case You Missed It Friday newsletter. And then, of course, the next month, the dominance inched up just a little bit further. So I hedged my bets in the article. I said, at least we might be close to it. So we'll see. Definitely something that I'm interested in as we progress through this current halving epoch and look at these AI and HPC pivots. I just see so much demand, every day in the news for energy for these data centers. I look at the fact that the U.S. has not meaningfully grown its electricity generating capacity in like 2 decades. To me, it seems like there's going to have to be a real, rubber meets the road moment with that. We'll see, though. I don't want to count our boys in the U.S. mining market out just yet. But speaking of that market, I want to go back to something we put a pin on earlier, and that's US-based manufacturing for ASIC miners. How much do you know about what facilities are currently online and how much capacity is currently available in the US for that? Because I know MicroBT has a facility that they've had advertised for a few years now. It's being US based, but Bitmain also making moves to do that as well. We crunched the numbers using import data from a Miner Mag article a while back, and it was something like they had shipped raw materials for like a 10,000 or a few 10,000 ASICs. So how is this currently happening with Bitmain specifically? Like, do they already have manufacturing hooked up in the US? If so, and if not, even how much should we expect from them in the future? If you could put like a rough estimate on output for these facilities.
Sure, and thank you for running those numbers. I think it was my fact that something like 187 tons of parts were being sent to the U.S. And I appreciate that podcast for you guys. Did some rough calculations to see, okay, how many miners is that? And it's definitely not a vast majority of what they're producing. The majority of this is still being produced in Asia. And they said that they would focus on assembling the latest models here in the U.S., like the S23 Hydro, that they will continuously invest in the production lines and upgrade their infrastructure here because of the potential demand in the future. I think even without the tariffs, that this was planned to be implemented. And, I'm sure that they're going to be starting the SMT stage to produce hash boards here in the U.S., and I think that'll be huge as well. I think they'll always maintain some production in Asia, but they will diversify their production between the East and the West, and I think that'll be major whenever we see that. Whenever they go to that SMT stage and start producing those hash boards here in the U.S. No exact figures to give you. I hope I can run it by some of the people at Bitmain whenever I go on that hydro tour in the coming days and see what they can share as well.
Yeah, it'd be really interesting to see just exactly their plans for the U.S. market, because if potentially you could save miners a decent chunk of change with these tariffs, and if you're just focusing on that U.S. market, still have to end up ramping up quite a lot of manufacturing, but we'll see how they do with it. I think they're looking at Texas specifically. I was doing some poking around in business records last week to see if I could, pinpoint anything. Going to some other ASIC manufacturers, we talked about Proto. Would love your take on two of the other, newcomer hopefuls that people are excited about, Auradine and Bitdeer. Heard good things on both sides of the aisle. Some people who are pretty happy with the machines. Mara just had a big pallet of hash rate delivered from Auradine last quarter. Bitdeer is using a lot of its capacity for its own self-mining, but it's also selling into the secondary market. Any thoughts on those, and if you're seeing any sort of demand from your customers for those models currently?
Yeah, great points. Especially with Bitdeer, they've said to produce something that will also be sub 10 joules per terahash. So there has been an interest, but they will predominantly be using that for self-mining. And we've seen some increased investments even from giants like Tether into Bitdeer. And I think that they're catering to that a bit more than any type of distribution of their miners, and rightfully so. I mean, that's where the money is for them right now. As for Auradine, you also hit the nail on the head. I believe that Mara had a $75 million deal with them. I heard that they had, invested into Auradine. I can only imagine what the, price per terahash is that they've paid for it. I think that they're still a bit too new to see such a large interest in their miners like we do in ANT miners, just because there is no way to tell, how long are these going to last? What happens, to these fans after a year or so? But yeah, so far I would say that they've gotten some bites. People have shown a little bit of interest. I expect it to grow as giants like Mara talk about their success with such a miner. Let's assume that that'll be the case, but people will follow suit. And, if tariffs last for a long time and people feel more comfortable being able to have access to a miner of which is at a competitive price point here in the US, they've got a huge advantage for that. Any of the US based clientele that we work with are all asking, about the stock here. Whereas, we've got warehouses in Shenzhen, Hong Kong, and the US alike. They all want something that's already here. So, in order to maintain a sense of competitiveness in this market, people have either got to start producing here or having stock here. And knowing that Auradine has done so, I think we can be bullish on their future.
So has it been difficult to get any sort of allocation from Bitdeer and Auradine because their production's just much smaller compared to the other big names?
Yeah, we haven't necessarily needed to for Bitdeer or for Auradine. To be frank, there have been some fights, and we've been able to use our sister company Starbase to help supply those demands. And with Bitdeer, I would say that is much more difficult, perhaps, just because of them utilizing their fleet for self mining. Most definitely.
That makes sense. Well, Michael, as we round it out, are there any other topics that we didn't touch on that you think are important? Like, are there any things currently with ASIC market dynamics that you think we should touch on that we didn't?
I think that things are just constantly changing. That the entire market of Bitcoin is incredibly dynamic, and we've seen this be the case in the ASIC markets. I think even more so because of things like tariffs. I think one interesting thing about this market are the levels to it. Whereas there are brokers of which are decently sized entities which actually don't ever own a miner or buy one themselves, but they're able to do millions in volumes just through brokering anything from Telegram group chats to sponsoring some of the largest events, and people go to their website and sales teams accordingly. To more investment brokers of which do actually buy these large scale amounts of miners and have the warehouses of which they ship them to and distribute them accordingly. And there are so many levels to it. And I find that fascinating to see distributors working with other distributors, rather than going straight to the producers. And sometimes that is beneficial for all parties, especially if you're something like a hash rate ambassador. So that's something fun. Maybe we can dive into another time. But it's interesting to see how that's changed. I've been in the space since 2019 and started out buying some S9s, or 2018 actually, buying some S9s even on Telegram to seeing the volumes of which producers like Bitmain are doing now is insane. It's unfathomable if we were to go back in time and tell ourselves that they would be doing these numbers. I don't think we'd believe each other. But no, I think this has been a great conversation, and I thank you so much for having me on. I hope to come back and cover this topic again at some point.
Yeah, thanks, Michael. I had a good time with it. Tell our listeners where they can find more about TicTacc and find you specifically.
Yeah, great. You can find more about TicTacc on TicTacc.com. You can find me on X at Yeehaw Bitcoin. So please give me a follow there. Would love to chop it up with everybody. I hope everybody can buy Bitcoin, mine Bitcoin, be kind to everybody you meet. I think we're all lucky to be here. I hope that we can all enjoy this ride together. Thank you to Blockspace Media and the Mining Pod for making the mining space a better place. I really love what you guys do. I've been a big fan for a long time, so this is awesome to come on here.
Yeehaw indeed. Appreciate that, man. All right, well, we'll let you go. Have a good week. And to all our listeners, hope you all have a good week as well. And we will see you on the roundup this weekend. Cheers, everyone.